Perfect. I am here today with Rick Gibson, investor, former CEO of BGI and the National Video Game Museum, which is very exciting to read, founder and director of Games Investor Consulting. So, how's it going, Rick?
It's really well. Pleasure to be here. How are you?
I'm good, thank you. And yeah, a pleasure's all mine, absolutely. So obviously that's a bit of a top line overview for myself, but in your own words, could you give us a bit of background on yourself and your history in the games industry?
Sure. I've been working in games for nearly 25 years in a range of different capacities. I run Games Investor Consulting with my brother, one of many brother teams that you'll find in the sector. We've helped scores of studios prepare to raise investment, drive revenue from games on every platform. I came up with video games tax relief, which I was delighted to see they announced has paid out over £1 billion to UK games companies just the other week. We advise investors and we help them with due diligence projects into potential acquisition targets. We do work on policy and a lot of strategy work with games and big media companies. So between us, my brother and I have started won funding for and run games companies. And as you mentioned, I'm the former founder and CEO of the British Games Institute, which runs the National Video Game Museum, which I stepped back from last summer after nearly 5 years.
Oh, amazing. And that's incredible. I didn't realize you were behind the tax relief. That is an incredible thing to have against your name.
It was a long campaign, and we worked very hard with a lot of very senior people in the sector, as well as bringing in economists, a PR agency, lobbyists, to create the business case, the economic case, and the cultural case for what has become the most important state intervention for the game sector in the UK.
Absolutely incredible. I now wish we were doing an interview on that because that is just fascinating. I'd love to hear the story of it. And I imagine it was an uphill battle, especially when people still didn't respect games even as much as today. So that's amazing.
For another time.
Yeah, indeed. Well, I'll keep it in mind. But today we're here to talk about investing in the games industry. And investing is one of these things that we all hear a lot about. And I think most people don't really know any more than a very, very basic understanding. Certainly, I'd put myself in that category. So I guess to get us started at a very top level, what does an investor in the games industry do?
So, games investors place money into games companies, and their primary aim is to get a return on their investment. So, how much they place, how actively they're involved with the company they've invested in, what they expect from that investment, and really who they invest in depends on the different kind of games investor and the kind of areas of the market they're interested in.
Oh, awesome. And so you mentioned there the different kinds of investor. So what are these different? I think people have probably heard some of the names. Angel investor, one of those things that got very popular. I remember when I was sort of coming up in the games industry and things like that. So what are these different categories, and then what different areas do they look at?
Sure. So there are lots of different types of games investors who invest in different kinds of games company. They include publicly listed funds that invest in games companies that are listed on stock markets. There are private equity funds that tend to invest in or acquire established large-scale games companies. There are venture capital firms that invest in a wide range of companies from early startups all the way through to quite mature games companies. There are games companies themselves that invest in and then acquire games companies. And then there are individual investors who are the angels that you mentioned. And I will happily quickly run through each of these and just give you an idea as to what they do and the kind of things that they invest in.
Awesome.
So
That's great.
Thank you. So let's start with the stock market investment. There are a relatively small number in an industry where there are tens, if not hundreds of thousands of games companies around the world. There are a relatively small number of mature listed games companies that float on stock markets around the world. And their stock prices are dictated ultimately by their shareholders' belief in the company's prospects, i.e., whether their actual growth matches the growth that's forecast by both themselves and by analysts. So investors in these stocks tend to be institutional, huge scale, risk averse. So we're talking about pension funds and index funds that might invest in a basket of hundreds of different stocks. And they are obviously very influenced and they're sensitive to the stock markets themselves, which can be depressed or inflated, but right now in depressed by things like pandemics, wars, inflation, cost of living crises, and so on. A subset of those who invest in the markets also invest in buying larger companies, and these are the private equity funds, and they will buy larger existing companies. They'll often try to turn them around or increase and expand their markets. Sometimes by raising new investment, sometimes by raising debt, and then their goal is to sell them and to list them at a higher value than they bought them for. So the management teams can be refreshed when those companies are acquired, and these deals, they can be some of the bigger deals in the sector. Their values are very rarely disclosed, although lots of people make estimates. Examples of that would be Carlyle, who acquired Jagex, Providence, who acquired Zenimax, and North Edge, who acquired the Catalyst group. Then you have the venture capital firms. Now, these invest in early to mid-stage companies with potential, but also risk. And these venture capital firms specialize in different types of company stage of company development, and they invest different amounts depending on the target company and the kind of investment that they like to run. So you have pre-seed companies that will invest under £250,000, seed stage, which tends to be under £1 million, Series A, which might be 1 or even 2 million, and then Series B and above might be 2 million and upwards. Hundreds of deals of this type are struck every year by venture capital games investors. They're numerous in Asia, in the US and Europe. In the UK, there are between 20 and 30 institutional investors who are active in games in any given year. So these investment companies have a higher risk appetite. But it depends on whether they're raising their own money from markets, from stock markets, or from high net worth individuals who then invest, and which they invest on those high net worth individuals' behalf in games companies, and also their location. So if you're a UK or a European investor, you tend to be more risk averse than those in the US, where the valuations of companies are much higher. So I also mentioned trade investment, which is when one games company strategically invests in another, and that's usually when the trade investor has partnered with or has direct experience with a company. So it might be a publisher that has published a game on behalf of a developer, and they might take a minority stake. The pace of that investment tends to vary depending on where the investing company gets its money from. So those who rely on financial markets to fund acquisitions, they're subject to the same market conditions as the institutional investors. So, a war or a cost of living crisis comes along, and they suddenly find that they can't raise as much money, and therefore the amount of investment that they do with other games companies falls. Some of them use the cash that they generate organically from growing at very rapid pace. But of both of those categories, you've got some, the most active in the space are Microsoft, Tencent, and then in the UK, one of Tencent's acquisition, Sumo Digital, has also been very acquisitive in terms of UK and some global companies. And then finally, we have your angels, and these are high net worth individuals who tend to invest at the riskiest and earliest stage of company, often right at startup. So these individuals, instead of giving all of their money to a VC to invest on their behalf, will invest some of it actively themselves. So they will get hands-on with games companies. They will look closely at them. They'll assess their potential. And in the UK, and this happens around the world, but particularly in the UK, you've got a group of angel investors who have exited from games companies, and they actively invest that money in groups. usually led by one person who's got a knack for finding a great investment, and they use their experience inside the game sector to spot promising teams early in their development when the valuations are relatively low. And you can also find that sort of below that level that there are grants available from funds like the UK Games Fund, and there is a little bit of funding from really early stage, seed stage investors. And both of those types of investment tend to use an investment incentive scheme in the UK, which gives big tax benefits for investors. It's called SEIS. So those are generally the main areas of investment.
Oh, fascinating! Yeah, I didn't quite realize the distinction between some of them, and even just hearing you explain the different series funding has made 20 articles that I've read this year make far more sense already. Um, well,
Absolutely. Well, I guess it entirely depends on each company is at a different stage in its investment journey. And after you've raised your first round, well, the chances are you're starting to think about your next one. And so that's where you start to rise up that ladder. But obviously, getting to that first stage is quite difficult, and we're going to come on to that a bit later, I think.
yeah, absolutely. And so you mentioned there about like how the stock market is obviously massively affected by the global conditions that it's in. And I don't need to tell anybody that we are obviously in the strangest global conditions probably most of us can remember, excluding probably the last couple of years. We heard a lot during the pandemic about a lot of excitement about games, perhaps a slightly misplaced belief that games would not be disrupted at all. But of course, it was more of the way that games production cycles work. Sometimes you had games still coming out during the pandemic that had basically been finished pre-pandemic. But thinking about that and the different conditions, what is the state of investment and excitement in the games industry in 2023 versus, let's say, 2019 and earlier?
Sure. So before the pandemic, games investment had been steadily on the rise. More investors coming in, games companies listing, and so more and more institutional investors getting excited in one of the fastest growing and largest media markets in the world. It's second only to TV in terms of all of the media markets. The pandemic, of course, kept us all at home, and we started to play, and we played at greater frequency, but also we spent more on games than ever before. Um, the problem with that was that after the pandemic, when we all went back to work, or some of us did, and that there's a correction just because we couldn't sustain that growth level that went up very rapidly, and therefore that corrected slightly, and so there was a slight fall in games revenues last year, which was exacerbated by the cost of living crisis, and I suppose that play and spend could not keep pace with the growth levels during the pandemic. So what the result of that is that the stock markets have been suppressed. Some of the venture capital firms have not been able to raise as much money, and overall games investment has been reduced over the last 12 to 18 months. Although there are signs of recovery, and we expect that in such a rapidly growing market as games, which has got really strong growth into the medium and long term, that certainly we expect those investment levels to recover over the next couple of years to get back to 2021 and levels, which were record, and then go even higher. But of course, it depends on which of those different categories you're looking at, and I'm happy to unpack some of those if you'd like.
Yeah, please do. I'd love to hear it. I'm guessing you were saying that venture capitals were affected a little differently to perhaps others.
They were so, and of course, many venture capital firms relying on the stock markets, and so that increase in demand meant that and then that correction is something that slightly spooked the stock markets, and so some of the listed games companies that I mentioned being very sensitive to stock market conditions and sort of macroeconomic conditions, then had to acknowledge that they weren't going to grow as fast as they had the previous year, or possibly as they had predicted. And that in turn led them to anticipate that markets would expect them to be downsizing. And so we have seen that. So we've seen some of the listed games companies downsize. closed down some studios. We haven't yet seen that wave break in the UK, but there are signs that some kind of a rationalisation may be coming here too. I hope not, obviously, for all the British studios owned by listed companies, and there are lots of them, and it's over half of the UK games development workforce works for a company that is internationally owned. But that may well happen. It has happened in the past. I think the other thing to mention here is that that ecosystem it definitely it impacts investment appetite, and mergers and acquisitions and listings (IPOs) are the two main sources of exit for institutional investors like venture capital companies and private equity companies. So when the number of opportunities to exit declines, then investment tends to decline, and that is a sort of chicken and egg that we've seen in the market. So IPO activity has been really significantly reduced, far fewer companies listing, and there is an issue possibly around Brexit, around companies wanting to list in the UK. And they have chosen mainland Europe or the US. We've seen share prices depressed, and mergers and acquisition activity has fallen off a cliff. So that means that opportunities for investors to exit, which is the important bit, getting the return on their investment, have been reduced. And so they have been reducing their investment. And that's the opposite of what's taken place for the last 10 years, as the games market has just kept on growing at this amazing rate. And while we have seen for the last 2 quarters signs of some recovery, and that may trigger some more mergers and acquisitions, but there does remain quite a lot of uncertainty, not least because who knows what new quirk of fate will be thrown at us by cost of living, inflation, and this awful war in Ukraine.
Yeah, no, absolutely. Oh, that's super interesting though. That's very intriguing, especially like to think about with that context of this like huge acquisition, the Microsoft Activision acquisition merger, however I guess it's really technically called. It's interesting to think of all these things under the shadow of this going on in the background, and the way that so many countries have had to be involved in it. And it wouldn't surprise me that investors also would be looking at this going, well, let's see how that goes before adding more.
Oh no, absolutely, and I think that when the head of Microsoft questions whether Britain is open for business as a result of an entirely independent body, the regulator, looking at whether the market is going to be distorted, the politicians do definitely jump. Yeah, let's look at that. Trade investment is. With games companies that rely on financial markets, they've definitely been affected by the macroeconomic situation. And I think those who rely on their own organic growth to invest, pandemic has seen massive growth in games revenues. But then there was that slowdown last year. And so we've seen the pace of trade investment, the number of acquisitions of games companies by games companies, that has come down. It most definitely will have peaked with Microsoft's huge, unprecedented acquisition of Activision Blizzard, which is going through the courts and regulators, been approved in most places. The Europeans seem happy with it, but the UK regulator is still having a think, and I think there's also still cases going through the courts in the States. So that's not a given. What we have seen also with other trade acquisitions, they have plateaued. So the most acquisitive in the market in UK and Europe have been Embracer, Tencent, and Keywords, and their pace of acquisitions have slowed down. Now, in Embracer's case, they started to take a hatchet to their cost base and started to let go studios and reduce the size of their development teams. And it was not least because they had a deal with Saudi Arabia. The Saudi Arabian National Wealth Fund had supported a group called Savvy, and Embracer had hoped to sign a big distribution deal. I think they haven't really said, but a $2 billion deal. And when that collapsed, then their Embracer's share price collapsed. Their cash flow was put under pressure, and they stopped being quite as acquisitive as they had been over the previous years. However, In 2023, that was 2022. In 2023, Savvy, Sony, and Keywords have become more active, and they've tended to focus their acquisitions on mobile studios. We are approaching the middle of the console cycle, and the current range of consoles are all kind of getting close to their maximum audiences and maximum prices for those games. And so big companies have traditionally always been on the lookout for really good quality console studios, sometimes with valuable IP, but often those who just have very large, experienced, and reliable teams that are able to work on AAA IP. And that's how a number of the larger studios in the UK have been acquired by some of the big publishers. It's to help those big publishers work on their most important, most valuable IPs. I think venture capital activity has also really slowed down, and although it has been increasing in the start of this year, it slowed dramatically, not just because of the financial markets, but also there's the crypto winter, which I think we'll come on to in a bit. There's a collapse in confidence in metaverse and all of the bubble around that. The first decline in annual revenues from the mobile games segment of the market ever, and as well as the poor macroeconomic conditions. And there the data is quite stark. So in 2023 compared to 2022 so far, there have been 60% fewer deals, and the value of those deals has fallen by 80%. Now
Wow.
that sounds absolutely catastrophic, right? But actually, there's still quite a lot of activity. It's mostly driven out of the US, where I guess the economy is in a slightly better condition than we have over here. It doesn't mean that there's no activity at all. Last quarter, games companies still raised 1.1 billion from VCs in 110 deals around the world. So it's still happening, but it has been much harder for games companies to raise that institutional finance. And if you look at UK venture capital firms who are experienced in games, you've got Hero Capital, which was founded by Sir Ian Livingston. They've announced only 2 deals this year so far, which is way down on lots of deals in 2022. And then London Venture Partners, which is probably the most experienced of the games investors, had a very quiet 2022, and that's continued in 23. But look at the US and Asian VCs, and you'll see much increasing investment activity led by a specialist games VC founded by esports and games people called Bitcraft, and they've been extremely active and increasingly so this year.
Oh, fascinating. Oh, that's really interesting. I'm not surprised to hear that America is continuing on while we're slowing down a little bit. But yeah, well, it's not all doom and gloom, as you say, and it's just a matter of perspective, I guess, on percentages.
Yeah, it is. I think with private equity is really interesting though, because that's been very muted since 2020, and that's because the private equity firms who are funded in turn by the stock markets have been coming under pressure from their investors to raise money to compensate for so few companies listing, particularly in the UK. And although there are signs of growth, and one of the biggest companies, games companies you've never heard of, which is called Kahoot. And I'm making a big assumption there, Connell. Apologies, but Kahoot, not many people in the games industry know about it, but it's a very big educational games company, serious games, and it does quizzes and does a lot with corporates and schools. They've just been taken private by Goldman Sachs. And over the last week, there have been some really interesting rumours around Playticker, and also around Jagex being put up for sale by Carlyle. Neither of those are confirmed, but really interesting to see that swirling around.
Yeah, definitely. It's funny, Kahoot, I have heard of because I was speaking to a friend who's one of their heads of customer support the other day. But that's really interesting about Jagex because I feel that they've inhabiting this bizarre place in the games industry that they were known for RuneScape, a game that felt it should have ended so many years ago, with all respect to all the current RuneScape players. But then they've done so well with they were like doing a publishing arm and people were very excited about it. So I'm actually surprised to hear it's almost not that it's gone the other way, but that they're considering selling it when it felt like all news had been good news for a couple of years.
Well, in a way, it's potentially because the news has been so good. That this is,
Right,
if it's
sure.
true, and there's nothing has been published, so I'm not speaking for anybody here. Um, but if it's true, that suggests that Carlyle want to realise the value of that investment, and they want to offload it. It doesn't mean that there's anything wrong with Jagex. If anything, it means the opposite. They've been doing really well, and all of the the news seems to point to a really successful and rapidly growing company.
Oh, fascinating. I think that even that exchange speaks to a lot of some of the difficulties with looking at investment from the layman average perspective is that you see someone selling a company, you think, well, there must be something wrong with it. It's not that someone
Mm.
wouldn't sell something if it's good, but as you say, it's actually the complete opposite of that initial reaction. Very
Oh,
interesting.
absolutely. I mean, I think that's what a lot of people forget, and in particular, games companies, is that we see a lot of games companies come to us, and because we advise them and we help them get ready to, prepare for investment, and often they're really focused on the game, whereas it's not that investors are not interested in the game, but the most important thing for the investor is to get a return on their investment. And for VCs, they're looking for what's called a multiple, which is a multiple of the valuation that they bought something for £1 and they sell it for 10. And it is that kind of level. I mean, really strong multiples are above a 10 times multiple, sometimes 20. And so they are looking at games companies as if they're really asking the question, are you a safe place for my money?
Hmm.
So that is driving every investor. Underneath that, as a secondary or maybe a third level of interest, they might be thinking, "Oh, that's a fantastic game! I absolutely love it," but they're really thinking, "I want to make some more money," and that's fine. I mean, that's capitalism.
Totally. And yeah, and it's, I guess, looking at that game and going, I want to play that game. I think other people will want to play that game as well. Totally. It is funny because I think a lot of, if you gave investor money to a lot of people, I would just be like, I'll just go invest in the game I want to play myself. And you do have to have that extra level of thought of, is it just me or a wider group? Yeah.
Absolutely. Well, I mean, data is behind a lot of the decisions of most investors. I mean, that is certainly true at the very high end. They're looking at very great detail at all of the financial data that's published by a company, or in cases of private companies or privately held companies. I mean, then they're looking at all of the company financials that are not disclosed in the annual return. And you have to be quite careful about what you publish in your annual returns. But I think for angels, we've definitely seen it's very hard to track how much investing is done by angels, but active games angels tend to get really close to that data. And so they're using their gut to say, okay, is this the team that I want to invest in? Do they have the ability to kind of ride all of the challenges and opportunities, exploit those opportunities that you get when you're in a games startup? I mean, it's notoriously difficult to track how much money they spent, and we don't know for sure. There's no data on games angel investment. We do know that as overall the US angel market, there was much more investment in 2022, which is really interesting. But if you think, well, angel investment tends to happen at a much riskier and earlier stage than institutional investors, that it's likely that angels will have started to invest again last year and into this year. And then, of course, what angels want is they want to see that the value of their investment rising. And so they will have loads of contacts into venture capital companies who have acquired or taken stakes in companies that they invested at an earlier stage. And therefore, that's where there is a kind of a relatively well-oiled machine between the angels into the VCs, up through the different stages and out through to an exit to be acquired by a games company. So I suspect that angel investment won't have fallen like VC investment last year, but quietly increased.
Oh, interesting. And thinking about indies, because when we think about investing, I'm thinking about bigger companies, and I think that's typically, especially when we're talking about series funding, it's maybe a validated indie, someone that's released a couple of solid games. But are investors interested in indies? And then, if they are, is that really just angel investor space, and everyone else is kind of it's too risky for them?
So largely, yes, that's true, but it entirely depends on which kind of investor you're looking at. So no investment fund that's investing 5 billion a year is going to be looking at one individual developer, and the private equity funds might look at an individual developer. They will be large. Some of them will be private, so they could technically be indies, but I sense that's not what you mean in terms of the scale of the company. Whereas if you're looking at, a 3 or 4 people working in a game startup, then the opportunities for them to raise investment are largely talking to, well, there's the UK games funds I mentioned, but there's also it's mostly angels. There are a range of other grants that you can get in the UK and around Europe, but really there's only a small number of really early seed stage investors, institutional investors, that will take positions in companies that small. So it can be quite a tough sell. It's not impossible at all, and I'll talk a bit later about what some of the things that investors are looking for when they're looking at a really early stage company. But it really depends. It's horses for courses. What size of fund is looking at what size of company? It completely varies.
Makes sense, totally. Yeah, you can't imagine. I imagine the terrifying prospect of a four-person team even getting interest from like a multi-billion investor, and I think the fear of it would be too much on its own. Um,
Well, I mean, so the exceptions of that tend to be. It depends on the different bubbles and the different markets, and we'll talk about this in a moment. That some companies have managed to raise startling amounts of money, either because they've just caught the wave, and that for a particular point in time, that's the thing that all the investors want to invest in, particularly consumer investors. I haven't really talked about crowdfunding because that is a whole different area. But it does come down to the experience of the team largely. And so there are people who might come out of a really big games company working on a really big game, start a company, and then you might be shocked at how much money they can raise.
mm.
And that's because they are leveraging their experience and a really, really talented team, that when you walk into investors, they feel like most of the risks are going to be mitigated by that team and their experience.
Oh, fascinating. And yeah, I can think of a few instances like that, and I wonder how those look to people kind of outside of the industry. And I guess on that is like, is there a lot like is the we talked a minute ago about the excitement of games and this constant growth it's had. Has that over time been like kind of bringing in more and more investors from outside of games as we go on?
Absolutely. So, and in each of those different categories, it's slightly different. So, angel investors tend to invest in packs, and there tends to be a lead angel or two. And what they often have is people they've met on the network, on the circuit, maybe in angel investment groups, where somebody who specializes in one area will talk about a potential interesting investment, and then 10 others might join them, and each of them drop 25 grand. But you might only have one person who really knows that sector, but they trust everybody else trusts that person, and then they follow that person. So you will find that more and more people are getting slightly more experienced of investing in games as angels. For VCs, that's definitely the case. That's been steadily increasing right up until 2022. And then the numbers started to subside for the reasons we've been discussing as the macroeconomic conditions sort of started to decline a little. We're expecting that those to return and to continue to grow. And that's ultimately driven by a market that is going to be topping 200 billion this or next year, and will continue to grow at a rate that almost every other media market is envious of. So I think for private equity and institutional investors, that is definitely has been increasing as gradually, steadily the number of companies that are listed increases. And then all of those index funds and those pension funds start to get a sense about what they're looking about. What for an investor, what you've really got to do is make a decision about how safe that place is for your money, and that means, is that company going to grow? Is it relatively predictable? Is it going to be profitable? And therefore, at some point, if I want to sell my stake, I'm going to make more money than I did before. And so there is definitely an education that has been taking place over the last 40 years as games companies have gone on to stock markets, and then a lot of them actually failed. at the start in the 90s. They had a really bad time of it, and particularly around 2000 when the whole there was a massive investment bubble that burst, and a whole load of venture capital companies got their fingers burned. So it wasn't quite ground zero, but they fell in substantial numbers. And then gradually that's been moving up. And I think one of the main things is that games have got much more predictable in their revenues. So from please back my hit, we've moved in mobile and PC and Web3 and some console games to games where the commercial model, you can predict if you put that money in that you to acquire a new user, that money will come out in terms of profit at the end of a process with a company that knows how to manage that user and monetize that user all the way through. So I think from backing hits where there are going to be hits, there are going to be misses, and in hit-driven businesses, that's a really hard thing to predict. It's a lot more predictable now, and therefore investors are starting to realize that it's safer for their money.
Oh, fascinating. And yeah, it's not a surprise in a way that, especially when you speak to people that casually enjoy games, if you told them the most profitable games in the world outside of Fortnite, which they've heard a million things about, when you talk about even things like Subway Surfers and some of these huge games, they have never heard of them. And I know it's like, well, no, because you're like hit chasers as consumers. You're here to play the games that come out that are huge and everyone talks about it and you love it, but you kind of miss this constant ongoing these games that just make way more and they do really well and people love them and they they don't have this critical response that could go either way and things like that. They're already doing so well.
Yeah, I mean, so that's definitely true. That top level of big hit is visible to everybody in the Minecrafts and the Fortnite and the Roblox and so on. But below that, the market is a lot more stable, and there's room for companies that are smaller but can grow rapidly. There's a lot more room in the market for them as the genres grow, the demographics of gaming expand, and the geographics of gaming also
Mhm.
get more and more exciting as new territories start to open up, which obviously has happened particularly for mobile games.
Absolutely. Yeah, a huge amount of excitement in APAC and how mobile in Asia is now leading to like things like Nvidia GeForce Now doing well, and then that coming back to PC gaming becoming bigger in Asia through mobile. Very interesting, weird way around. And that perfectly brings us on to our next question. So we're going to talk a little bit more about what you were saying about what investors are excited about and the things that are kind of ticking their boxes at the moment. So mobile, I mean, anyone who is not a mobile gamer is almost begrudgingly hears it and goes, "Oh, I wish people were this excited about PC games or about this." But how is mobile gaming viewed by investors in 2023? Are they still as excited about it?
I think they are because of that predictability. I mean, the investors would have been spooked by 2022's decline in mobile games revenues. As I said, it was the first that we've seen that in mobile games. There's also everyone is also slightly discombobulated by Apple and Google raising technology barriers to stop the tracking of players. And so that means that for mobile games companies, you're less efficient at acquiring customers because you can't track them as well, which is dismaying for many companies. And I note that if Unity is going to start charging a fee for every install, that's also going to have people pausing a little because that will affect the profitability of companies. But all that means, though, is that when companies are talking to investors about raising money, they just need compelling answers about how they can grow their audiences. How can they increase the lifetime value that they generate from their average customer? Are the metrics going in the right direction, particularly keeping the customer acquisition costs under control? And what we have seen is rising trade investment over the last 6 months, which has been quite heavily focused on mobile and a little bit in Web3. So we saw Savvy acquiring Scopely, one of the big mobile games publishers. We've of course had Rovio get acquired by Sega, which is a really interesting move, and there have been others. So I think mobile is still, for its predictability and its sheer scale, is a pretty good bet.
Fantastic. And yeah, it's that reach. You just can't put money really on there, how valuable that is. Everyone's got a mobile phone and everyone needs to play something on the train sometimes. Um, in,
Absolutely. They
in
just often don't identify as gamers, and so you might be talking to somebody who doesn't like games until you realise that actually they secretly do, because they play Candy Crush for half an hour on the train twice a day, every day.
This
Um,
is it. I speak to my mum about playing the word games she plays and Scrabble and things like this. And I'm like, you're a very valuable person. Like, you play that game every single day for quite a few hours. I'm like, that's good out driving you. And she was like, no, surely not. And I'm like, you've been on there since dinner. This is it. Guaranteed gamer. Um, so now to the opposite end, unfortunately, in my opinion, of in terms of reach of player base and what that can do is VR. VR has obviously been talked about for like so many years. I think people's excitement gets ahead of them. They want it to be the next big thing. It still hasn't been. Are investors really interested at all in VR, or is it just in this who knows sort of state at the moment?
so this is a really interesting one, and I think probably a couple of years ago I would have agreed with you. I was always skeptical about the ability of VR to reach the mass market, but actually doesn't really matter. So VR had its investment moment from what, mid 2015, 16 through to 2019, 20, when the investment bubble, appeared to burst. Um, and that's when it became clear, just as you're saying, that despite rapid growth in Quest 2 from about 2020, that mass market adoption of VR just wasn't going to happen at all. But that's not to say that it's not viable. And in fact, VR gaming has been growing very healthily. So if you think about it, VR is a relatively greenfield site. You don't have the really big games developers and publishers putting all of their top tier titles, the triple A's, into VR. Some do, but not all of them. And therefore, that means that for smaller and medium scale VR games developer publishers, actually there's a really good opportunity. There's some very profitable companies out there. And in fact, the investors tend to agree. So although, we think the VR studios have been able to raise money when other kinds of studio haven't. So if you look at In Dreams in the UK, raised £20 million, and that's one of the biggest rounds that we saw in the UK. XR Games raised 6 million, and both of those in 2022, and they did it by demonstrating a solid track record in profitability, rising revenues, and the use of IP, both from traditional media but also from other games genres that weren't yet ready to touch VR. So actually, VR is a relatively healthy space for games investors. It's counterintuitive.
It definitely is. I mean, it's incredibly good to hear. I love VR. I used to work in VR, and that was it. It felt like we knew we were in a bubble then in terms of the excitement. Even the people that worked in the same office, the excitement they would have from seeing our team do it. But it's not a surprise in a way, especially when you say what the Quest has done. And I think that even if it's not mass market, the fact that the average person, I could speak to anyone I know, and they have heard of the Quest headsets, they would be interested in trying them. All this, it's great to hear. I'm really glad to hear that, because I really do hope that VR does become the next big thing. Or it allows a revolutionization in game interaction, etc. That would be wonderful to see.
No, it would. And I mean, there was a point where Quest 2 was outselling Xbox.
Crazy.
Yeah. And these are kind of tend to be ignored after a bubble has burst. I mean, I think the one where the bubble burst and then it's going to be really hard to reconstruct it is VR's sibling AR, and there have been the road is strewn with the corpses of AR game companies who tried to do something, and really is only one company that's managed to do anything decent, let alone billion dollar turnover. And obviously that's Niantic, and nobody else has really been able to do that. And I think the problem there, even with Apple announcing its new AR goggles, is that the consumer initial ticket price is so high that that's not going to reach mass market for some time. I expect those will collapse in time, and maybe all of our glasses will have something built in. And I'm for me, that's the one I'm really looking forward to. But I'm afraid I've had to stop drinking the Kool-Aid on that one.
No, that's the right choice, absolutely. And it's interesting how I feel like it's the Quest is the standout for VR in that way, that they really brought that cost down to something that's much more, it doesn't have that ticket shock of seeing it and going, God, really? Because I remember the Vive Pro and Valve felt like they were going the other way, um, with going up
Yeah,
in
it does,
price.
but you still need a relatively good rig underneath your
Absolutely.
PC, and so that does add up. And I think those are just going to be kind of barriers to mass market. But again, I don't think it matters. I mean, if Valve can't do it
Right.
with Half Life, um,
Alex, yeah.
then Alex, then I'm not sure anybody can. And I think that probably was the point where people realize, okay, we're not going to get literally everybody with their headsets on, but it doesn't matter.
No, oh, fascinating. Oh, well, great to hear. This is it. Can just be me and 50 other people, the only VR players, but hopefully it's enough. It's also just really interesting to think about that with the context of Sony's continued like investment and going PSVR 2 and throwing everything away that they had done with the PSVR 1 and really kind of reworking that entire system. And then to compare that to Microsoft still after so many years doing nothing with it. It's interesting to compare that to that interest.
Yeah, yeah. I think there are some believers there, but I think the way that Sony sees PSVR is that it's a peripheral. It's another peripheral. It's expensive peripheral compared to the normal, new console controller. But it's still a peripheral, and therefore a proportion of your installed base might get it, and there are enough of them for that to be viable. And maybe at some point it gets the cost down to the point where it ships it actually with every new PlayStation. I think we're a generation away from that. But and also the fact is that even then people won't use it. It's like 3D TV. I remember getting one of those, and that it just gathered the headset gathered dust on a shelf, whereas I watched the TV in 2D perfectly happily.
Yes, that we always used to say this when we were testing VR is people who think that VR would be everything, and it's just it will never be everything because it wouldn't be comfortable. You don't always want to be invested in something, and games on the go. I mean, even aside from AR, there was some company a while ago talking about like wanting VR to be like, oh, on the train you'll do VR, and it's just you can't imagine it. You just have a train full of people being robbed by the one person not wearing VR.
Absolutely, yeah. It'd be a field day for the pickpockets.
Exactly. Oh, fantastic. Um, Now, moving away from VR as much as I could talk about it all day, you mentioned about like crypto, Web3, and all that.
Hmm.
Obviously, NFTs and crypto were so big in games. I mean, they literally so big they were affecting the cost of hardware and things like this in the games industry. We're post that NFT excitement, certainly, maybe still post a crypto excitement or in a kind of a dip or a winter, I think, as you called it as well.
Yeah.
Did that affect Web3 as badly as it affected the wider crypto interest? And will those ever recover, do you think?
Well, they kind of already have. Which again, it's also really interesting. So, I mean, Web3 was kind of clearly a bubble, and you could clearly see that the particular advocates in the sector were kind of going crazy for it, and some of the funds that were raised, some of the amounts of money being placed, hundreds of millions into, I mean, often in cryptocurrency itself, right? So that was slightly kind of not dodgy, but hard to establish what their value would be,
Mm.
given that the currency was fluctuating like that every couple of hours. But the valuations into companies that really had almost um, no games development experience, and they weren't making. I mean, I'm making a big generalization. There were a couple that were doing great work, but there were a few that that were quality, but the majority weren't making very good games. And they were crypto enthusiasts who thought, oh yeah, we can make a game. And the problem was is that they were using an end user commercial model in play to earn that turned out to be quite exploitative.
Mm.
Um, and in fact, you could through one lens, you could say actually that's a pyramid scheme that happens to have at the very top of it has a video game, and that you're buying those NFTs, and then you're inflating the value, but there's no new value being created. So I think if you add in the fact that so you have not particularly good quality games, you've got an exploitative commercial model at the time. And then you had the fact that the currencies or the blockchains the currencies were built on started to look not just inefficient in terms of their power usage, but also ecologically unsound to a generation of consumers that cares much more about the environment than a previous generation did. And so that caused investors to retreat. You had the collapse in cryptocurrency values, and all of a sudden you have a crypto winter. The thing is, though, is that those blockchains had been quietly getting more energy efficient. And in fact, there are lots of academics arguing about whether they were as energy inefficient as they appeared. And I'm not going to enter that one because that's a very big and sort of very heated debate. But the commercial models are getting more sustainable too. So what we saw for about 6 months of last year, maybe 9, was that Web3 companies were really struggling to raise funding with really experienced teams. But for the second quarter this year, the biggest investment category in games was Web3. So even though it has scaled back significantly from those bonkers valuations, and 780 million raised by one company with no games experience, investors are definitely still active. And so you could argue actually that the crypto winter didn't happen, or if it did, it was actually really quite a short cold snap, and that actually the Web3 bubble is still there.
Oh, fascinating. That's really good to hear because it did feel like it could have been something. So I'm glad to hear that it could still be something, and that I guess it's tough when it's everything everybody is talking about. The second it's not that, it looks like it's collapsed, whereas actually it's just not the hottest topic for that month, kind of thing.
Well, I think Web3 gaming is one of those. It's like finding a seam in a mountain that is an inch wide but kilometers deep, and so it's that like VR is never going to be a mass market thing. People are just not. Most people who play games do not want to trade items with other people who play games. Your mum playing the game you mentioned is not going to be trading. But what you might find in 10 years' time is that she's playing a game that's built on a blockchain and
Mm.
and that is funded in a more sustainable way. And who knows? You might find that there are currencies that become much more used by the general public than they currently are by a sort of crypto elite who communicate with acronyms and leave most of us cold.
Well, I look forward to it. And I guess then thinking about like looking ahead and how things are going to affect the games industry is obviously like generative AI. I mean, people, it feels like that's 2023 is the year of people labeling advanced computer systems as AI. But it's very interesting thinking about it in games. And obviously, there's a lot of stuff coming from countries like China where they're talking about that being used in some mobile gaming and kind of how that's sitting with players. Is generative AI as exciting to investors as it seems like it would be, or is it still maybe a little too early?
I think that this is the next. It's the next big wave, and I'm not making some kind of crystal ball kind of announcement here because it's already started. I think it's definitely the next big games investment trend. You do have some investors in the valley who are making all kinds of claims about AI's ability to transform our world, and you get the inevitable immune system reaction that's happened in games over 4 decades, whether it's free to play mobile gaming, smartphone gaming, social gaming, and so on. That reaction is very standard from the more conservative rump of the game sector. Generative AI is no different, and in fact, you'd expect that because really, when Anderson Horowitz start talking about how generative AI is going to steal everybody's jobs, we've all got a right to be suspicious about that. I think Gen AI has some very compelling ways to reduce some of the the really repetitive tasks that are really time consuming involved in making games. And I don't think that all those animators and artists who used to spend hours and hours creating and animating leaves on trees and then have to repeat themselves for a whole forest, I don't think they complained when SpeedTree came along. And the reason they didn't is because it allowed them to focus on higher value tasks that exploited their creativity. And I think what you're seeing is you're starting to see the adoption of similar tools, whether it's for texture generation, whether it's for NPC dialogue and barks, or whether it's training animation based on a first model. So I think those are examples. I think for me the exciting thing, but also possibly the kind of threat, is the sheer pace of change and the potential impact of that change. These large learning models are being trained on such a wide variety of activities, and they're showing such rapid progress that it's hard to predict their impact. And that could be more widely, economically, socially, morally, but let alone more narrowly on games production, on post production, on live ops. So I do think there's a gold rush mentality being adopted by some investors, but to be honest, their job is to trigger a gold rush. The reason these bubbles happen
Mm,
is that the people who are early in want to make as much noise about something because they then want to generate more people coming to invest, which increases the valuation of the company they've just put money into because it's in this bubble. And so there is something self-serving about that. What I would say is that I think the difference between the generative AI bubble and say the VR bubble or even the Web3 games bubble is that the potential payoffs from generative AI could be more transformative and be much more wide ranging for the sector in terms of speed and efficiency of development. Now, I don't agree with those who say that an AI will start to develop an entire game from scratch. But I think there are fantastic tools out there which will help you with prototyping. I think that those tools are going to get into the hands of amateurs and consumers who will start to create stuff that will be surprisingly good, particularly when they go into a platform like Fortnite or Roblox. And I think what you see, though, is generative AI tool companies have been finding it much easier to raise money than almost any other sector of gaming at the moment, maybe apart from Web3. What's interesting is that the UK investors haven't seen that yet, but I think they're gonna find out pretty soon.
oh, fascinating. It has been far too long since I've heard anybody mention Speed Tree, so that was great. It's been about 10 years. I love that.
I know, I know. I'm showing my age there, but there we
But
go.
it was. I
So are
remember
you.
how incredible. Exactly. I remember how incredible it was and seeing it, and like it was at some game show, seeing someone draw with it and being like, "Wow!" Like no doubt, and totally. God, I mean, why would you put an artist to that job? Nobody wants that job. It doesn't use anybody's skills unless they've dedicated their life to being specifically a tree artist. Um, it is really interesting to think about that, and totally, I think it becomes this difficult debate where people, um, the morality of it is only affected by jobs in the job market, but that isn't AI's fault or its choice. That's to do with how we then react to it. I think to an extent, but I'm excited by what you said about imagine that in the hands of indies. Imagine giving a small dev and who could only do instead of having to do five different things now you can do one thing and then have AI to assist you around the side. And what we could see come out of that could be incredibly exciting. Definitely like increasing the scale of these games past what we've expected.
Yeah, absolutely. And the speed of their development and making it sort of easier and focusing the people involved in that process on the bits where people are always going to be better than an AI, which is on the creative side, whether that's in
Totally.
programming or art or music or what have you. So yeah, I think it's going to be quite profound.
Definitely. Oh well, I'm excited to see it. And I guess to take us then back a little bit, back from this future-looking view and to something more traditional. We talked about how excited people are from mobile, and you talked about early or on the interview about how we're kind of halfway through the console cycle, which is it's a fascinating thing to think about because when you put that context on this console cycle specifically, you could argue also the previous generation. It it feels weird to even be looking at this as PC and console versus mobile. It feels like three different groups. Are are investors looking at PC and console the same way? Are they still, is the level of excitement compared with mobile still what you would expect compared with maybe what it was a few years ago? Or is this a very changing kind of field?
Yeah, so I think for both PC and console, I think that it's going to be harder for a sort of vanilla kind of premium console studio to raise money, and
Mm,
often those are the companies that grow organically and then can be acquired by larger companies looking for really good quality teams. Um, so, but actually, I think what we have seen is games as a service have certainly spread quite rapidly into PC, and there are some great examples in console where the product that you launch isn't necessarily the same thing when as you carry on monetizing it in year 3 and year 5, and GTA is a fantastic example of that. So I think what that speaks to is that there are always going to be developers who are needed to create the first version of the game, but the ones who can use data in order to optimize the game, to figure out, well, what do people actually enjoy playing, not what my gut as a fantastic games designer of however many decades might tell you. That's not me, by the way. That's theoretically, but what the player in numbers is doing. And I think those skill sets
mm,
from mobile and maybe Web3, as they start to be brought into PC and console studios, they will transform that. And in part, it's because the commercial model of the console is starting to change, and that post launch revenues are getting to the point when you run it for long enough that they're actually higher than your initial launch for some games, not all. So I think it comes back to what investors really want to see is they want to see growth, they want to see predictability of profit, and they want to see longevity. And so I think it really depends on the kind of studio that you are, and when you're raising money.
oh, fascinating and really interesting to hear how player data comes in. I think, yeah, it's definitely, I'd love to do a whole interview on that because I think the changing of maybe an old school game design philosophy of the auteur philosophy of this person with a vision, and it's a singular vision, and that is how it happens, compared with looking at what people actually want. It's fascinating to think about, especially when you think about Fortnite's success essentially from emulating a game that was just doing well, and which also then was emulating another game that had done well, and all this. Very interesting to think about how that changes the industry.
Well, I mean, I think as a whole, that one of the strengths of the sector is that we're always evolving. We're always, I mean, we're talking about what, 7, 8, 9 different subcategories of games, and every couple of years a new one is invented by some genius somewhere, and then the whole sector kind of continues to grow. That's one of the secrets behind the explosion in games and its popularity with the public, is that we've always seemed to come up with something new for the public to enjoy, for a different segment of non-playing the public to play. And I think that evolution it might happen game by game in some companies. When it happens inside games, then that's where investors get really excited, because they see teams that have a culture of change, of improvement, of learning, and also learning from failure. Right? I mean, that's how these teams do it. They try 3 things, 2 fail, one's slightly better. We'll do that, and then that works for a couple of months. Then that stops working, and then you have to split test something else. So there's a real cultural shift that's been running through the industry, and with mobile taking now the majority of the industry's income, that means that a good proportion of the sector, in terms of our staff, our development staff, our commercial staff, they're all doing the same thing. So I think that shows the industry is evolving very rapidly.
Super interesting. It's very intriguing to think about games in that way compared with even tech, which we think of as always evolving as well. But I've been watching some stuff recently comparing what people were excited about with tech and how that's changed from 2005, 2015 into 2025. And it hasn't been able to maintain the same level of excitement in terms of smartphones and stuff, that people aren't as excited for their new smartphones as they used to be. It's why things like flip phones are coming back, which, as of someone from the mid 2000s, yes, absolutely excites me. But it's very, very interesting to think that. And Yeah, it is. It makes almost proud of the games industry that it constantly does find something new to try and a new avenue that no one had thought of. It's a unique and very fun aspect of it, certainly. And speaking of succeeding from failure, esports. Does anybody care?
Yeah. Uh, so esports is really kind of suffering a bit from overpromising and under-delivering, and esports has fallen pretty dramatically out of favour, certainly with institutional investors. There's some pretty disastrous performance of some of the listed esports companies.
They got pulled
Um,
off, didn't they? One of the major teams did, yeah.
Yeah, and so it's difficult, and I think again they were kind of heralding a mass market, and maybe that won't happen, or
Mhm.
not quite in the way that they thought. I think that that's most of the story, and so most investors are not looking particularly excitedly at esports, but that's not true across the board. Bitcraft and also Savvy have continued to invest in esports. Savvy has slightly moved on in that they were notable. I mean, Savvy is ultimately a Saudi Arabian. It's a We want to take over a sector, and we want to establish a really significant bit of territory in a sector, and they're looking at lots of different sectors, and one of those is video games. And I think that they realised that esports in Middle East and North Africa is already huge, and it's growing faster than anywhere else, and it was growing faster than development. But the value creation is actually much more so in making a game that sells well and that you can monetize than it is having millions of eyeballs watching a single team play against another single team. And I'm not saying that market is kind of dead or dying. I think that there will always be a place for that, but it's not the flavor of the day for investors at the moment. And I think games revenues are growing much more rapidly in lots of other sectors.
Oh, fascinating. And really interesting to think about with Asia, where they've got esports in the Asia Games 2023 and things like this. But then you've got to look at it in that lens of going, but no one is sitting there saying that badminton is going to set the world on fire. There's people that love badminton, and if it's in the Olympics, you'll watch it, but it is for its own market kind of thing. And it does feel that esports maybe is a similar kind of appeal.
Yeah, and I think, but to take your metaphor, I think there are some blockbuster sports, and in esports, you've got the really big titles that everybody wants to watch
Hmm.
people play. It's really hard to get a new title in there, and it takes really significant, like more than AAA console game development budgets in order to break into that market. And even then, the companies that have done that before, when they try it, they also fail. And then it feels as if, even with all of their resources and an existing subscriber base and all of the influencers and so on, they can't dramatically expand the number of games that we all want to watch people playing, then I think that is one of the very natural constraints. So, I mean, maybe it is. Maybe no. Let's go back to your metaphor. So, I mean, will badminton ever be as big as tennis, or football, or rugby, or I don't know, some of the North American sports that I don't watch? Then no. But it doesn't mean that badminton isn't fun. It just may not ever generate that much income.
Totally. Oh no, yeah, very fascinating. One thing that's really interesting when early on we mentioned about the Microsoft Activision acquisition was the UK regulator, and one of the big things the UK regulator said was about cloud gaming, and I think a lot of people were a bit confused why that was the thing they focused on, but you have seen a lot of excitement about it, and especially in Asia, and as I was saying with things like GeForce Now, kind of opening up whole new markets through cloud gaming to people that didn't have those devices. Is cloud gaming something that investors are looking at the moment, or?
So, so yes. Well, there's two bits to my answer, as with almost all of my answers. I guess the first is just talking about the regulator. I don't think, and forgive me, regulator, but I don't think they really knew what they're talking about when they talked about cloud. Because in the same breath as they were talking about streaming games, which is what you and I would describe as cloud
Totally.
gaming, they also talked about Azure. And so what they really meant was online, and therefore, we've been talking about one thing, and they've been talking about another. And I suspect that my guess, if I was to read the runes here, would be that Activision Blizzard merger with Microsoft will go through, because they've divested themselves of rights to things like actually streaming games that aren't huge opportunities, but that will just be part of the the the, the engineering layer. That is the way that some games are delivered. So, I mean, you'd be forgiven for thinking that cloud gaming is actually pretty much dead after Google dropped Stadia. Um, but then we have the initiative you just mentioned. Bitcraft just invested in yet another cloud gaming startup, one which is all focused on smart TVs and has zero integration and just uses a phone as a game controller. And I find it all a little bit perplexing. I mean, it's sort of after the wave. People are still caught up by the little waves that come along. Um, but for us, we've been around for too many years, and we've seen so many cloud companies come and go trying to do the same thing. That for well over a decade, we've seen companies trying to do this, and for one reason or another, it's never really worked. And I think that actually, as a standalone thing, I don't think it works, because I don't think that we consume games like that. We consume them where they're available. We don't really care about how that is streamed. It's on my phone when I'm out and about. On Do I care if it's a 3G or a 4G or a 5G network? Probably not. Do I care if I can make that call and get quickly to a web page? I probably do. But if someone started to explain to me the intricacies of how the 5G distributed network works, I'd glaze over quite quickly. And I think that for cloud, it's the same with cloud gaming. I think it will just be one of those ways that games are delivered to the end user.
Totally. No, I think that's a totally good way of putting it. It's so funny. I had even forgotten about it till you said it. But I remember trying OnLive when I first moved to university halls, and they had good internet. And I'm from the country. I was like, oh, I can use it now. I remember trying it, and it was okay. And people were like, yeah, it actually works all right. But it works all right in the same way it does now, totally. And it's a lot of excitement about something that, as you say, it's almost like an excitement that it exists. It's not going to convert directly to consumers being hugely excited about it, especially in our market where generally people have hardware. If they want to play games, it's part of the deal is that you have something to play it on. And then with mobile phones, you already have something to play it on, and those games are appropriate for playing on the go. You don't always want to be jumping into Witcher 3 on the train to work, pulling out a controller just to play it. It's a bit of a pain, yeah.
No, absolutely. But I mean, I think it's really an infrastructure play, and if companies come up with a cool additional bit of infrastructure, then fine. I mean, we were playing multiplayer games with really low latency when on really shockingly low amounts of bandwidth 20 years ago. And the games companies figured a way of delivering that without kind of game stopping, game experience ruining gameplay. And I think we've always managed to fix it as a sector.
Mm.
Um, if someone else comes up with a new infrastructure play, great, all strength to them. It's not. I don't see that many investors kind of jumping in the way that they did a couple of years ago into that particular little bubble.
Fascinating. And then I guess last question on what investors are interested in before we can look more about individual companies quickly is just the metaverse. We've talked about VR, but the metaverse was such a boom and bust weird. It feels like it is everywhere still in terms of people talking about it, but also no one cares about it. Do investors?
Yeah. So I think there have been startups that have been raising funding to build product, usually maps inside of Fortnite and Roblox on behalf of brands, and we've seen a couple of those successfully raise. And obviously, Epic and Roblox have been steadily releasing tools that allow more people to build content. And I mentioned how I thought Gen AI might well have a role to play there. So I can see some overlap as the APIs for those games open up, and not least because anyone investing in those companies is going to have half an eye on the platform itself, on Epic and Roblox, to acquire a plucky young company that's done something clever with their tool set. But the wider metaverse, I don't know what metaverse means, actually, if we're not talking about existing large-scale video games, and there are only a handful of those. So maybe best not to get me started on what the metaverse actually means. Are investors particularly interested in metaverse? Everyone's definition is slightly different. So some of them would say, yeah, I'm really interested in metaverse. And then you find out actually what they're talking about is something completely different. In my definition, not hugely.
Fascinating, and kind of glad to hear it, because I don't think we want Mark Zuckerberg at the top of whatever the next revolution is in games. But that's all really, really interesting. It's super fascinating to hear the investor perspective on a lot of these topics. That, because as a consumer, obviously, you looked at it in such a different way. And then to finish off the interview, to think about what investors are looking for at companies, whether this is for someone at a company kind of wanting to attract investors, or just like myself, kind of interested in knowing what goes into that process. What are investors looking at when they look at a company? How do they evaluate it?
So there are 5 things that we talk about, and they might not be the things that you expect. So the first is team. If you look at London Venture Partners, who are the most experienced of the games investment institutional investors in the UK, one of the most around the world, they talk about investing in people. Which is really interesting. They're not talking about, I mean, they almost only invest in games or in game-like products or games-based learning, that kind of thing. It's always around games. But they don't talk about games that much. They talk about the team and the people. And that's really important, because investors, again, want to know who is going to be looking after their money. And so we talk about when a startup comes to us with a business plan, and they do that all the time, and we help them out in little contracts, is we ask them, okay, we'll have a look at how rounded that team is. So a lot of startups come to us with absolutely rock star games design, programming, and art. But the bits that the investors are as interested, if not slightly more so, is production management. How do you get this very talented team to delivery? The commercial planning, what's the commercial model and how is that going to be exploited? Who's leading that? And marketing. So how experienced is that team? Can that team cope with adversity? Can they learn from mistakes and improve? So team is the very first thing that we start with. The second is the commercial proposition. And it goes back to what we've been discussing about, are you a safe home for my money, if as an investor's perspective would have it. How will that studio make money? Have you baked the commercial model for how you make money out of your end user players into the design of the game, or is it an afterthought? Have you got a scalable model? The other way of asking that question is, are you banking on a hit, i.e., you build a beautiful game and then you're hoping that through the quality of the game, really good review scores, quite a lot of optimism, that you're going to have a hit? Or are you building a game that you're going to adapt so that you can figure out what works, build more of that to the point wherever you end up, you evolve into a profitable company? So, and that really comes down to investors wanting to see a return. They don't expect it to be guaranteed. They do want to see a company's commercial rationale, and they're not going to invest without a proper financial forecast showing the costs and the income. So commercial model is really critical, and good games angel investors are going to know that data in fine-grained detail, and they're going to want to see that you're conversant in that. So the next one is the fit between the game and the platform and the demographic of your player. And really, this is a question about realism. So are you realistic about your market, the people who will play your game and what they actually like? And the litmus test question here is to ask about competitors. And it's quite difficult to look for competitors when you're a startup. And I've been in this situation where you come up with this what you think is a wonderful idea, it's quite, you can tend to be reluctant to have a look and see if anybody's done it before. And if they did, what did they do? Did it work? Because this could potentially completely knock out your idea before you've even got started. But it's really important to do that research because, one, it informs you how innovative you're being. Two, it helps you anticipate the question that an investor might ask, which is, oh, yeah, I've seen that before. What happened to these people who did almost identical product? And if you don't know, then that's egg on your face and you won't raise the money. And also, what have you learned from their experience that raises your chances of success? I mean, one of the wonderful things about games is that our people tend to share a lot about what worked and what didn't. Go to GDC and you'll find people talking about the stuff that they really cocked up as much as the thing that really helped them succeed. And you can learn probably a bit more from what the mistakes they made than from their success. And so that fit between your game, your player, and platform should be deeply informing everything that you do, because ultimately it's about who you're making money off. The final two, one is route to market. A lot of games companies come to us with propositions, with game decks, and these beautifully crafted games filled with lovely art and animation videos and demos and even prototypes. But the question that an investor will always ask is, okay, that's great. How are you going to get people to play it? And that's fine for you to say, actually, it's not my responsibility. I'm going to give that to a publisher. It does push risk that the publisher doesn't believe in the game quite as much as you do. And of course, it adds in a revenue share, which you might not want. Are you going to do that user acquisition yourself? Are you going to outsource that? And in both of those cases, well, where's the cash to do that? Where's the expertise to acquire those users? And how is that reflected in your financial model? So route to market actually is one of those questions that often people forget, but is absolutely fundamental in terms of how you monetize. Will you end up owning your own player? Or will they always go through somebody, a publisher's gate where they own all of the user data and you just happen to be one of 100 games on in their portfolio? And then the final question we ask is, it's not appropriate for all platforms. I mean, particularly if you're doing a premium console game, then really you've got some very high level questions about who plays your game. But player data, as we've discussed a couple of times, it's mission critical for mobile games, for a lot of PC games, for all Web3 games. How well do you know your players? How comfortable are you kind of getting your fingers into the data? Who's gonna analyze that data? Can you use that data to optimize your game? And can you convert players to purchasers more effectively as time goes on? Are you comfortable with split testing and improving your product, as we were saying? And that's the cultural question we were discussing before about how companies need to be in a particular mindset to be able to accept that beloved concept, as we were saying before, could change when the rubber hits the road and your players stop playing your game. So what you'll notice in that list is that what's missing is the game. And I know that any consumer watching this will be going, what? But actually, a lot of games companies do too. And that's because when a games company walks into our company and says, here's my demo, they always have a demo. There's always a concept. There's always concept art. There's always the game, and so it is a given. But almost nobody comes in with those 5 questions answered. And in fact, I remember one of the most prolific games investors that we know, when we were catching up with them, they said that they hadn't invested in a single company that had answered all of those questions. So in a way, it's fine if you don't have answers to all of these questions. I guess the question is, what are you going to do to strengthen and prepare yourself to get asked that question? There's one other thing I would add here, and that's there's an old truism about a studio's first game won't sell, its second game will break even, and its third game will succeed. Investors expect that, right? And so they're not expecting you to instantly have a hit because they're realists. The chances are, if they're an angel investor or an experienced institutional games investor, that they will have seen this countless times already. What they're not expecting is an instant hit. What they're expecting is to see a team that can learn, adapt, and succeed. And so it's really important to kind of remember that there are lots of ways that you can plug these gaps, and that's really what we do. We help prepare games companies to talk to investors, and that's really important because there is one thing about investors that if you're a games company you need to know, and that is that investors will receive scores of pitches every month, and so they become extremely good at almost instant snap judgment. And the way that they do that is they pigeonhole very quickly, and they think you're, the old that old sort of analogy of an elevator pitch, that you've got just the time that it takes to go up a floor in an elevator to sell your concept to an investor, and therefore you're best off saying that it's like this merged with that for this kind of person, and that you can get it into a single sentence. They will be pigeonholing you. The problem with that is that if you pitch unsuccessfully to an investor, it's really hard to pitch again. Now, some of them are really forgiving and are wonderful, and so you can go and talk to them a second time, even if they've said no. But the majority of them don't want to see you reheat an investment plan that you took them last time, slightly tweak it, and then bring it back to them, because they will simply say, no, you know what, thanks, but no, I've already looked at this. So it's really important you get it right that first time. And so there are lots of ways to plug gaps in those 5 different areas, or 4 if you're not in mobile and Web3. And that's what we do, is we provide a very safe space for people to pitch their ideas, to literally run through their investment decks with us, to have practice sessions where we role play being investors, asking the really hard questions, and a safe place for them to fail, to answer all of those questions satisfactorily, because at the end of it, they have not jeopardized their investment. And we can then say, okay, here are the things that you need to go away and think about. You've really got to work. You're one person down in your team. Your route to market is a little bit flawed. Have you thought about X, Y, and Z that will patch that up? And then you've got a stronger proposition, and so on. So that's the kind of service that we provide. And I think it just really helps to think of yourself as an investor. What's a safe place for my money?
Fascinating. That's really interesting to hear, especially on the not expecting a hit first time. Makes me think of the Witcher series is a perfect example of a 1, 2, 3 of a like not that
Absolutely.
good, got on the level, did super well. Absolutely fascinating. And
And
my
that third game was absolutely amazing. And the second was,
yeah,
yeah, quite
yeah, almost there. Yeah, like
almost
good, but
quite
not quite
clunky
totally.
at times, and so
Yeah,
on. So, yeah, absolutely.
exactly. And this, well, my last question was going to be, what's the best way for new developers, and I guess not even necessarily new companies, but companies with a new project looking to get the attention of investors? But I think the answer is they get in touch with you guys.
Oh well, I mean, no, we're not the only ones out there. I mean, I think I mean there are a couple of steps. You've got to have a really good pitch deck, and that's the best way of showcasing your company, your team, your investment proposition. And it's not just your game. In fact, anyone focusing just on a single product is going to get shown the door quite quickly by investors. They want to see a company that is run by a team and that has the potential to build success over multiple titles. So that's really important. I think practicing your pitches out loud, talking to people, sharing it, finding a friendly, grey-haired kind of person who can give you some friendly, safe advice is really useful to practice. What happens if when they ask you that really difficult question that you haven't anticipated, which happens all the time. And there are just good ways of answering that, even if you don't have the answer exactly at that time. There's lots of ways to find potential investors. There are lots of lists out there. Of course, we can help with all of these. And then getting their attention, actually, there are lots of different ways to do that too. I mean, I think the best one in the UK is the finance market at London Games Festival, which is it literally matchmakes games companies with investors, both trade investors and institutional investors, and they have been tasked by their funders, which is primarily the Mayor of London, to go and build as much business as they possibly can out of that event. And so they will work on your behalf to matchmake you to a really good investor. You don't have to be based in London either. You can travel in and meet potential investors and trade companies, and also, there's lots of games publishers and people who specialize in Asia who go there. But there are lots of great trade shows, GDC Gamescom. You can look at the LinkedIn feeds of investors. They're usually at the big games trade shows, and you can usually find them. And often, I mean, not always, but often, these companies are open to be contacted. You can tweet them, you can link into them, you can email them. There is one other, I would say, Slush in Helsinki is really good place to meet all kinds of investors, and it's not overwhelmingly filled with games companies, but it's a good place to raise money, because again, that's exactly the same thing but more broadly in technology. So lots of ways to get their attention.
Oh, fascinating. That's really cool. I know that stuff with London's amazing. Good for them for really putting in the effort for it. That's great. I wish Glasgow did it, to be honest. We could use a few more.
Well, you've got Scottish Games Week, and hopefully those guys,
Indeed.
Brian, can get some investors up there. I'm sure they're interested. It's one of the biggest clusters in the country, so it should be possible.
Amazing. Oh, let's hope so. Yeah, this is it. Oh, I need to start a company soon. That week's coming up. So
Yeah, it is. It is true.
fantastic. Well, thank you so much for your time today, Rick. It's been absolutely fascinating speaking to you. And thank you so much for shedding some light on not just kind of how to access investors and some like actionable advice that I think is going to be really useful for a lot of devs, but also just an insight into kind of what investors look at, how do they see the industry and what they're seeing, because it's not something that I think many places ever shed light on. You just kind of hear about investors, you never really get to hear about them. So thank you so much.
My pleasure. There's one other I should plug, because I'm running a panel which is talking about games investment at the Games Growth Summit up in Manchester at Media City on the 2nd of November, and that's to an audience of studios, and there will be studios and possibly one or two investors on a panel talking about this stuff, and it will have the opportunity for up and coming game studios to be asking questions of studios that have gone through the process of raising money and are happy to share their war stories.
Oh, that sounds amazing. Yeah, anyone watching, definitely go check that out if you're in or around Manchester. I might even travel down just to see it myself.
Good stuff. Come and say hi.
I will do. Also, thanks so much.
Cheers, Connell. Nice to see you.